Hello, and welcome back to another episode of Chat with Brandy, a weekly show where we talk personal and business finance, taxes, and how to make money doing what you love. I am your host, tax preparer and bookkeeper, Brandy Miron, and this is episode 28. So today, first of all, sorry for the late start. I'm having technical difficulties with my phone. It is dead. So I am filming on my laptop today, so it might be like the camera might be a little bit strange, but should be okay. Today, I want to talk about something that affects a lot of Albertans, which is disability tax credit. So this is something that I think a lot of people have different notions about, different ideas about, and there's a lot of misinformation out there about it. So I kind of want to tackle this video because I end up talking a lot about this with many different clients. So I did touch on this topic a little bit in episode 25, where I talked about kind of all the seniors benefits and things that are available in Alberta. But of course, disability tax credit is not only for seniors. And I thought that I could dedicate probably an entire episode to this credit. And so here I am. So first of all, what is disability tax credit? So it is a federal credit this year, and it changes a little bit every year, but 2019 is $8,235 tax credit. So what that means is if you owe tax or you're in a position where you have tax payable, so usually if you have employment or pension income or something along those lines, you'll get that $8,235 tax credit, which translates basically into 15% of that $8,200, okay? And again, that's on the federal side, but if you qualify for it federally, you should qualify for it provincially as well, at least in Alberta you would. So to be eligible for this disability tax credit, you have to have, first of all, obviously a disability, but the disability and the symptoms that come with it have to follow a certain protocol. So that is what we are going to talk about in this video today. So let's first of all talk about the types of disabilities that, and obviously there are thousands, but let's talk about some common ones that would be eligible for this credit. So first of all, any sort of walking issues. Okay, so you've got knee or hip problems, osteoarthritis, poor circulation, foot disorders. Obviously you're in a wheelchair, you have to use a walker, and sometimes not even, like you could just use a crutch, something like that, slowed walking, okay? Digestion disorders, so if you've got inflammatory bowel disorder, Crohn's disease, colitis, incontinence, if I can say that word, anything to do with the prostate, limited upper body mobility, so we're talking weak or shaky arms or legs, back or neck problems often, breathing disorders, so we're talking there COPD, emphysema, tuberculosis, chronic asthma, even sleep apnea in some cases, hearing impaired or blind. So that would either be complete deafness, or if you need to use hearing aids even in some cases, and again, blindness. Cognitive issues. So this is down the road of not only dementia, Alzheimer's, memory loss, confusion, that kind of thing, but also in some cases it could be anxiety, depression, even ADHD or learning disabilities in children or adults, okay? And then any illness that requires life-sustaining therapy for at least 14 hours per week. So in many cases, this could be diabetes, that would be insulin dependent. Dialysis, ongoing antibiotics, even certain types of physiotherapies may qualify for this, okay? So we've kind of talked about some common disabilities here. However, eligibility for the disability tax credit is based on the effects of the impairment, so not the actual medical condition itself. So for example, you could have person A who is insulin dependent diabetes, but still may not qualify when person B has the exact same issues because of the extra qualifiers that we're going to go through here. So there's a self-assessment questionnaire that is on the Canada Revenue Agency website, which I will link to in the show notes. But I'm going to go through the questions right now. It's very helpful for you to determine. And anytime anybody ever asks me about disability tax credit, I always say, go take this questionnaire first. If you feel like you may be eligible, then you're going to take the next step, which would be go to your doctor. And we'll obviously talk about that later as well. So here's the questionnaire. Has your impairment or physical or mental functions lasted or is expected to last for a continuous period of at least 12 months? So that is the number one key thing. So going back to if we were talking about the walking problems, for example, okay, so you go, well, I had a broken leg last year. You would only qualify if those symptoms lasted for more than 12 months or at least 12 months. Okay, so that's the number one thing. Number two, are you blind? So blindness is going to qualify for all of these. Number three, do you receive life-sustaining therapy? So they call this therapy that's needed to support a vital function, even if it eases the symptoms, and the therapy is needed at least 3 times per week for an average of at least 14 hours per week. So this is kind of where I was talking about the dialysis or the insulin-dependent diabetes, okay? So just you receiving life-sustaining therapy is not enough. It has to be at least 3 times a week for an average of 14 hours a week, okay? Do the effects, this is the next question, do the effects of your impairment cause you to be markedly restricted? Okay, so this means you're unable or it takes you an inordinate amount of time to complete, even with therapy, devices, and medication, at least 90% of the time in one or more of the following areas. So speaking, hearing, walking, eliminating, feeding, dressing, mental functions necessary for everyday life. So they're saying you need to be markedly restricted in any of those, one or more of those areas, at least 90% of the time. So again, that's kind of where I was saying, just because you have a disability, you may not qualify because you need to be markedly restricted at least 90% of the time, okay? If you are significantly restricted in 2 or more of the basic activities of daily living, or you are so again, they're saying you have 2 of those, or you're significantly restricted in vision and only one of the other ones, then you would still qualify. Okay, so again, that kind of falls into if you have vision restriction. Okay, the significant restrictions exist together at least 90% of the time. And so significant restriction and marked restriction are a little bit different. Again, these are just kind of questions to see if you would even qualify. But if you answered if you answered yes to question 1, so it is lasting over 12 months, and then any one of the questions from 2 to 5, so are you blind? Do you receive life-sustaining therapy? Do the effects of your impairment cause you to be markedly restricted? If you answered any of those questions yes, then you may qualify. So then the next step would be applying for the credit. So one of the big things that a lot of people don't understand about disability tax credit and the application of it is you do not need to wait to file your tax return in order to apply for this. So I would encourage you to apply for it earlier. So first of all, it takes 4 to 6 months for them to even look at your application. So it's going to take a while. Okay. And secondly, you can adjust years back. So let's say it's coming up to tax time and you know you might qualify for, or one of your dependents may qualify for disability tax credit. I would encourage you to apply now. And then even if you haven't gotten your answer by the time it's tax time, we would file without the disability tax credit and they will adjust later. Okay, so in order to apply, there is a form called a T2201. I will link it. Basically, it's a 6 or 7 page form. You fill out the first page. So it would be if you're the one applying for it, it would be your name, SIN number, address, that kind of thing. Or if you're applying for it for a dependent or a spouse, for example, you would fill out your information as well as theirs on the front page. Then the rest of the form gets filled out by your doctor or a registered nurse who is familiar with your condition. So I always recommend that you would go to the doctor that knows you best. So for example, if you have, let's say, a herniated disc in your back, I would suggest that you go to the specialist who has dealt with that the most, rather than your family doctor, for example, okay? However, if the symptoms, let's say you got diagnosed 10 years ago by your family doctor, so the symptoms go back that far, I would probably go to them. Just whatever doctor or nurse is going to know your condition the best. So they're going to fill out the information, and they'll know the difference between, like I was talking about earlier, markedly restricted versus significantly restricted. They're going to know if the condition is expected to worsen or get better with time. They're going to know how long the symptoms you've suffered with. So they'll fill all that information out. Sometimes they'll charge you a fee. So they'll charge you $20 or $25 to fill out the form. Do keep that receipt because you can use it as a tax deduction the following year. Then you send that document into your tax center. So if you're in Alberta, you would send it into the Winnipeg Tax Center. Again, it takes 4 to 6 months for them to approve. But if they do approve it, they'll go up to 10, again, they will go back and adjust up to 10 years of tax returns for you, which honestly could equate to over $10,000 in tax-free money for you. So there is not really anything to lose, aside from perhaps the time to go make the appointment with your doctor, maybe that $20 or $25. But if you have taken that questionnaire that we talked about earlier and you think that there's a chance, I would always recommend going for it. I've also seen scenarios where the doctor has filled out the form and it's maybe they weren't clear enough on some of the items, and CRA will come back to the doctor. So they'll go straight to the doctor and say, we need clarification on item 1, 2, and 3 kind of thing. So sometimes you might have to be on top of it for that. So you might want to follow up with CRA to find out what's happening with your case, that kind of thing. But again, I don't think that there's anything to lose and there's a lot to gain. So if you do get approved for disability tax credit, first of all, they're going to adjust backwards. You can start filing future years as long as you still have that disability with that credit. So you'll get that little bit of a tax break, but there's also other benefits that are related to this credit. So if you are eligible for disability tax credit, you would also be eligible for home accessibility expenses. So this one's only for seniors, but it's for anyone who is eligible for disability tax credit and is over 65. If you own your home, you may claim a deduction of up to $10,000 on a qualifying renovation that would allow the individual to gain access to or be mobile or functional within the dwelling. So a good example of this would be if you are wheelchair bound, you're over 65, or even you have a walker and you put in, a ramp, or you put in a stair lift, something like that, you would be able to get a tax credit for that. The next one is disability supports deduction. So this one doesn't have an age limit on it. Disability tax credit eligible individuals who pay for certain medical expenses in order to go to work or to go to school or to do research in which they received a grant. So this would be things like for younger kids or students, like adult students, a Braille device or a note-taking device, or those voice over text kind of devices, reading services, captioning, things like that. If you have to purchase that software in order to work or go to school, then you would be able to claim that deduction. And then the last one for disability tax credit eligible individuals is certain medical expenses that other individuals can't claim. So a big one is specialized care. So that would be either a home care nurse, so someone coming to you, or if you have to live in an assisted living facility, you would be able to claim the expenses, some of the expenses related to that, whereas other people would not be able to. So again, there are a lot of benefits to this credit. I do want to encourage you to to reach out to me or any other tax professional if you do have questions on it. But again, I will link all of the information that is put out there by the government on the show notes. And yeah, I hope you guys found this useful. And the information is, if you know somebody that you think may qualify, pass this video on to them, because I think that this information is not that well known within Alberta. Okay, that is it for this week. I hope you have a wonderful week, and we will see you then. Bye.